how much of these investments and the building of the companies is dependent just on who's driving the company versus picking the right markets or actually building the right products? Like, you've invested in so many companies at this point. There's the argument that some people are founder investors, some are market, and some are product. Like, where do you come out on that framework, and what do you actually look for when you're making these investments?
Yeah, I was telling the story that my daughter, when she was 11, I took her to her favorite sushi place, and she was like, "Dad, how do you invest? What do you do?" And I looked at her and I said, I call it the love principle. Like, you have to love the founder, the team, the product, the market, right? And if you don't love any one of those things, probably not a good investment. And she looks up at me and she's like, "Well, I love Great America." And it was true. She would go there every weekend. We'd always go for Halloween haunts, and I was like, "Okay, so you love Great America. Like, here's what you have to do. You have to go there and interview and do what's called diligence, interview the employees, get insights." And she did that. She came back. She was like, "Dad, all the employees like love the company. They love the CEO. The company's called Cedar Fair. The 49ers are doing $1 billion stadium there." And I was like, "There you go. So Cedar Fair is a public company. That's your first investment." So she made 100% return, and she's starting her own company now at 19. And when she was 18, she started it. And she learned a really important lesson. She's using the profits from that investment that she did when she was 11 to start this company. But I tell that story because that is exactly how I invest. Like, those are the four quadrants. And if I have any kind of, qualitative or quantitative reason not to believe in one of those things, I'm not going to do the investment. And for whatever reason, that's been working. I'm up about 73x since 2011, which is amazing. Like, first of all, I never thought I was going to be a venture capitalist investor. I'm an immigrant kid, poor kid. Like, I just didn't, I just never, I didn't think that was possible. And I was surprised when I started getting those, offers and opportunities. And so that formula is something, that is qualitative and quantitative. And some people are really good at the quantitative, and some people are really good at the qualitative. If you're good at both, I think you can go in the pantheon of great investors, in terms of track record, and also in terms of just reputation amongst founders. I think what you said about Elon and Travis is absolutely right. Like, we look for great founders, right, that are building industries. Like, one of the things I say is, like, build industries, don't just build companies. And that is an interesting juxtaposition in terms of some of the fissures you're seeing in the venture capital world versus founders. Founders are amazing. Founders have a lot of opportunity to get funding, and also can be picky and choosy. And when you're not picky and choosy, you end up with bad investors on your board, on your cap table, and it is a nightmare. We've lived through things like that, and it can be an absolute nightmare. And so, if you look at like Elon's story, like, there were venture capitalists that when he needed the money in December, in that 60 Minutes interview where he, had tears talking about that moment where he thought that his companies were going to die, right? That he had worked so hard and he put every dollar that he had into those companies to save them. And he was living at his friends' homes and didn't have a house, and was basically homeless, working on these companies, having put every dollar that he made on PayPal and his other startup as a mapping company that he had started in his early 20s. And so he took that kind of bold risk. And, I think a couple of the VCs, especially one, bowed out, at the last minute. And Elon had to rescue the company, and And I don't think he ever forgot that, right? I don't think he never wanted to be in that position again, where his company could get killed. I think Travis has gone through similar types of journeys, and he's working on his company. I don't think there is a VC on that cap table, right? And so I think what's going to happen is great founders like Travis and others are going to fund other great founders. And founders are going to become more careful, right? If they have the luxury of choice, they're going to be careful about who and what firms and what angels, what investors they bring in. Because if you bring a psychopath into your company, if you bring someone that schemes against the company for whatever reason, it can kill a company. It can destroy billions of dollars of value and also hold back progress for humanity, especially with these types of founders. So it's an interesting branch of investing in entrepreneurship, which is there aren't that many of these types of founders, right? And I have a thesis that as entrepreneurship spreads and goes viral, that we're going to find the Elons of Africa, the Travises of South America, right? Like we're going to find the undiscovered Edisons that are out there that have that talent, but opportunity hasn't come to them because opportunity wasn't democratized. And that's where we're at now. And if you think about the next 20 years, the next 40 years, people say disruption, but that doesn't really cover what's happening. The speed at which these innovations are coming are getting exponentially faster. Look at blockchain and Bitcoin and what's happening. These are, to me, systemic bets, long-term systemic bets on the future of humanity. And when you back someone like Elon, or you buy and invest in Bitcoin, these are two different types of asset classes, but they're long-term systemic bets on the future of humanity. And I'm into systemic bets. Those are massive bets. Those are like TAMs, squared. What's the total addressable market of a planet, of a new world, of a new civilization? Like what, right? And so if you think that big and you think intergenerationally, if you think beyond your own life in terms of your investments, whether you're investing for your family, institution, yourself, and so on, you have to think long term.